The Indian equities clearly seem to have run out of breath and breadth. And what's happening in the month of September is quite a stark contrast to the corrections that we've seen in calendar year 18 thus far. And what's leading the way? I think the rupee. No price for guessing that. Now look at this. This is the returns in the month of September. The Nifty's fallen about 3.3%. The list of gainers is not as interesting because IT stocks have gained, but the list of losers is very, very interesting. Companies like Hindustan Unilever, Bajaj Finance, Ultratech, Titan, ITC are correcting. And what does this show? It shows that the market is in a mood of now getting the lofty valuation stocks back to some bit of sanity. The good names are correcting, which is never a good sign. But what's really leading to this? Yes, the currency is at the center of it all, but are there other factors at play? Are there other factors that people have warned us about as well? That's the key question. Banks, the last few days have been in the center of it all, and now the Nifty Bank is resting very close to the crucial 100-day moving average. If this were to broken, then the next levels are at the 200-day moving average, which is way lower than the current prices. So from a technical perspective as well, some key triggers to watch out for the next few days. But frankly, it all boils down to what is it that is leading this correction, because it's just a 3.5% correction, but portfolios are already under a lot of pressure. Valuations, steep valuations, about 19 times or 20 times 1 year forward earnings. It is never cheap, and it's pricing in a 20% earnings growth, and any miss thereof might actually lead to problems. But even if there's no miss on the earnings growth, when you have a 20p multiple, and if the currency depreciates the way it has depreciated, or if there are trade talks and tensions around what could happen on the global trade front, that would weigh in. Add to that the heavy global calendar, and come November or December, we have a bunch of events on the local front and the global front. We have Fed rate hikes and accelerated tapering, as well as the midterm elections in the US and the 3 state elections in India as well. So all of this leading to a very heavy and uncertain time for equity markets, not just for India but globally, and therefore maybe, just maybe, the smart money is taking some bets off the table in anticipation of lower levels. Frankly, I can see no other reason why the kind of correction that we've seen is happening. Let's wait and watch if this is the end of it, or does this percolate into something which is much steeper than what we currently envisage.